Good morning and a warm welcome. I'm Holly and you're watching Kalkine TV live from Sydney. This is the Global Markets Roundup, and we'll be bringing you a glimpse of equity, currency and commodity markets across the globe. So let's get started. Bond yields spiked and global share prices slipped after hitting new highs on Tuesday, following the biggest jump in US inflation in 13 years. Scaring investors who have seen equity prices double from last year's lows. The MSCI World Equity Index, which tracks shares in 50 countries, fell 0.15%, while the S&P 500 and Nasdaq ended lower on Tuesday, after hitting a record high earlier in the session, with investors digesting a jump in consumer prices in June, and earnings from JP Morgan and Goldman Sachs that ticked off the quarterly reporting session. The Dow Jones Industrial Average fell 0.31%, while the S&P 500 lost 0.35% as well. The Nasdaq Composite dropped 0.38%, and 3 of the 11 major sectors of the S&P 500 remained in the green zone. The consumer discretionary stocks led the session on the blue chip index, lifted by robust earnings reports from some of the largest US banks like JP Morgan Chase and Goldman Sachs. Although stocks declined, JPM fell 1.44%, while GS shares dropped 0.87%. Visa, on the other hand, gained 1.43% and MasterCard as well 2.21%. Bank of America dropped 1.28% and PayPal dropped by 0.19%. Airplane maker Boeing stock fell 3.53%, a sharp drop reported after delivery delay of its wide-bodied 787 Dreamliner jets due to the flaw in the structure. The company said it would take at least 3 weeks to fix the issue. And PepsiCo Inc. said it would increase the price of its products after releasing its second quarter earnings report. The beverage company's overall net revenue surged 20.5% to a whopping $19.22 billion US dollars, beating analysts' expectations. Shares of PepsiCo rose 2.33% on Tuesday. And in the technology space, Apple increased by 0.86%, Microsoft Corp by 1.23%, and Taiwan Semiconductor Manufacturing Company gained 1.24%. Nvidia Corp decreased 1.31%, while Adobe Corp advanced 0.78%. On the other hand, Nokia, SC Works Corp and Excelia Technologies gained 9.7%, 14.66% and 30.98% respectively. Chinese stocks, on the other hand, like DD Global, rose 7.21%, while Alibaba Group rose 2.30%, and Baidu Incorporated advanced 2.65% as well. Onto the futures and commodities market. Gold futures were up by 0.10%, and silver saw a decrease of 0.68%, while copper fell 0.57% as well. Brent oil rose 0.04%, and WTI crude was up as well. Now for a look at how the bond market fared. The 30-year Treasury bond yields were up 2.77%, while the 10-year bond yields increased 4.18%. US dollar futures index increased as well by 0.58%. And that is the latest from the US markets. Now it's time for a short break, but please stay with us and I'll be back to take a look at the European and Asian stock markets.
Hi, This is Andy Liu broadcasting from Kalkine Media Studio in Australia, and I'll be hosting the new Kalkine Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to Kalkine TV and join me.
Welcome back, I'm Holly and you're watching Kalkine TV live from Sydney. This is the Global Markets Roundup. Let's have a look now at the European and Asian stock markets. European stocks eased marginally from all-time highs on Tuesday as investors sold economically sensitive sectors following hotter than expected US inflation. But some upbeat earnings capped losses. The Pan-European Stoxx 600 index ended flat after hitting a record high in the early trades. The Italian government bond yields hit a 3-month low on Tuesday as the European Central Bank said it would chart a new policy path as early as next week, further boosting demand for Eurozone government debt. Eurozone policymakers said on Monday that the central bank would reflect its change of strategy, which includes a changed inflation target and more emphasis on asset purchases. That is, in its next meeting to show it was serious about reviving inflation. And the London markets traded on a mixed note after the release of the British Retail Consortium Retail Sales Monitor and Bank of England Financial Stability Report. Same-store sales in the UK in June 2021 grew by 6.7% year-on-year. And FTSE 100 listed stocks like British Land Co and BP plc shares plunged by around 1.60% and 1.10% respectively. Trustpilot Group shares surged as well by around 7.60% after the company reported a significant surge of 31% year-on-year in its H1 FY2021 revenue, following the impact of the pandemic in the previous year. And Star Phoenix Group shares went up as well by around 32.14% after it stated that it was evaluating a clean energy initiative. The company has signed a non-binding agreement to explore hydrogen opportunities in Western Australia. Onto the Asian markets now, and Japanese stocks gained on Tuesday with the broad Topix index hitting a near 1-month high after markets recovered from last week's sell-off and awaited a slew of corporate earnings for a fresh readout on the country's economic health. Nikkei share average closed 0.52% higher, while the broad Topix gained 0.73%, its highest close since the 16th of June. China's blue chips closed higher on Tuesday, supported by strong gains in consumer staples firms, as new data showed the country's exports grew at a much faster than expected pace in June on recovering global demand. At the close, the Shanghai Composite Index was up 0.53%, while China's yuan rose to a near 1-week high against the dollar on Tuesday, as strong trade data contained some investor worries over softening economic growth following the central bank's decision to cut the reserve requirement to prop up the economy. And South Korean shares jumped for a second session on Tuesday, tracking Wall Street's strong finish overnight and boosted by upbeat Chinese economic data, while investors awaited US inflation data and Federal Chair's Jerome Powell's testimony. The benchmark Kospi ended 24.91 points, or 0.77% up. The index had gained 0.89% on Monday, the most nearly high in 2 months. The won strengthened and the benchmark bond yield also rose. Well, that's a wrap for the European and Asian markets, and it's time now for another short break, but don't go anywhere because we'll be right back.
Crypto talk by Kalkine. The crypto market has been red hot given the Bitcoin rally since the past year. And now the most famous cryptocurrency has got competitors, Dogecoin and Ethereum. If the crypto market excites you, tune in with me, Sage, to know the latest developments about the existing digital currencies and the new ones that are joining the race. I'll help you understand the opportunities and the risks the crypto market has in store for you. For all the digital currency related developments, continue watching Crypto Talk by Kalkine.
Welcome back, I'm Holly and you're watching Kalkine TV live from Sydney. This is the Global Markets Roundup. Let's have a look now at the Australian share market. On Wednesday, the Australian benchmark index, the ASX 200, traded under pressure, with local miners expected to support the market on the back of higher iron ore prices, amid the looming outlook of a COVID-19-led lockdown extension in Sydney. The Australian and New Zealand dollars fell against the US dollar on Tuesday on the back of higher CPI data. The pandemic-led lockdown also kept pressure on the Aussie dollar, which was down 0.37%, trading near the support of US dollar. The Kiwi dollar was also down by 0.51%, with strong support laying by the US counterpart. On Tuesday, the ASX All Technology Index continued its recovery, gaining 0.33%. Although looking at a weaker action of Nasdaq 100, the Australian tech space could face a bit of resistance today. Shares like Afterpay, Xero and BrainChip should be approached with caution for the day. On Tuesday, crude oil prices surged almost 2% amid the International Energy Agency's statement that the oil market should expect tighter supply for the now due to disagreements among OPEC member countries over the oil supply for the next few months. And Australian energy shares like Woodside Petroleum, Santos and Viva Energy could mimic the jump in crude oil prices. And on to gold, which traded in a range on Tuesday and was almost unchanged at the closing as firmer US dollars offset support from bets that the Fed was less likely to respond with immediate monetary tightening after US CPI surged by the most in 13 years. That was in June of this year. And gold miners like Silver Lake Resources, De Grey Mining and Newcrest Mining should be on investors' radars. Iron ore futures in Asia ticked up on Tuesday, with the benchmark Dalian contract rising over 3% as concerns about the restricted supply of steelmaking raw material overshadowed expectations of slowing demand for steel in China. The most actively traded September futures contract of iron ore on China's Dalian Commodity Exchange closed daytime trading 3.3% up. And copper almost traded flat on Tuesday but came under pressure from climbing inventories and falling imports by China. A stronger US dollar also put pressure on the industrial metal. The benchmark copper on the London Metal Exchange was little changed. Local miners like Fortescue Metals, Rio Tinto and BHP Group could be looked upon for trading opportunities in today's session. Alright then, that is just about all for now, but stay tuned with Kalkine TV for more live market updates. We'll be back with more news on markets, economies and diverse themes and sectors. Holly Shields signing off.